This is Gerardo Del Real with Resource Stock Digest. Joining me today is the president and CEO of Revival Gold, Mr. Hugh Agro. Hugh, how are you this morning?
Excellent, Gerardo. Thank you for having me.
It's great to be able to catch up again. The last time you and I spoke, we talked about the fact that the very next time we spoke, which is now, we would likely be talking about the drills being mobilized, and that certainly is the case. I want to get into the details of the unanimously approved $4.2 million exploration program that will see drilling not just at Bear Track, but some pretty aggressive drilling at Arnett Creek. But before we do that, we talked off air just a bit about how challenging and frankly opportunistic the junior resource space is right now. If you're able to buy into the better management teams that have proven assets, there's very few teams that rank up there with the Revival Gold team. There's very few assets, frankly, that have the infrastructure in place and the resource base that you have. Can you provide a bit of context of where the market is in regards to the metrics, which even in this depressed market, if you take Revival Gold's per ounce share price and you kind of compare that with the industry average, even in today's depressed market, you offer a pretty compelling speculation.
Yeah, stats that we've been looking at, Gerardo, recently out of Beacon Securities show us at roughly $6 an ounce relative to our peers, which are trading in the order of $11 to $20 an ounce. So lots of upside in the stock price. And remember, Revival Gold is financed. We completed a $5 million financing last month. That sets us up very well for the programs this year and all the news that will come from that. And so, yes, it's an opportunistic time to be getting into Revival. And if you're already a Revival Gold shareholder, I think you can feel very good about the upside in the stock from here and beyond. We've got a great story.
You have approximately 2 million ounces across all categories, across both assets. We're looking to add to that. I've gone on record saying that I anticipate that by year end, there will likely be at least 3 million ounces. I know that you are hoping to initiate an updated resource estimate by year end and then hopefully commence a PEA study in 2020. Let's talk about what you're going to do to get to that resource update later on this year or early next year with the drilling at Bear Track and Arnett.
We put out a press release last night, as you alluded, that talks to the program for this year. The focus will be twofold. At Bear Track, we'll be extending the scope there in the Joss area, where last year we got some fabulous intercepts a kilometer south of the existing resource, and it's that kilometer south is all within mineralized material. So clearly, we're going to be adding resource at Bear Track from the drilling in 2018 and from the holes we'll do in 2019. And then from the second focus will be at Arnett, where last year we outlined about 400 meters of strike at the Hades zone in near-surface oxide material. We'll be back in there with 20 to 25 holes in and around and expanding on the mineralized envelope there. And that's really will be the second source of material for our updated resource. And yes, I'll say that we're targeting that 3 million ounces, and we feel very good about our prospects to be able to accomplish that goal. As you know, we're already at 2 million ounces in the Bear Track area. We've got the 2018 drilling. We've got the drilling we'll do this year. And as we announced in our press release, we've brought on a first-class consultant in Roscoe Postal to do the resource update and commence that work at the end of this year.
You're also undertaking a very important second phase of metallurgical test work. Can we talk a bit about that, specifically as it relates to the sulfide material, which I think is going to become increasingly important if we get the gold price and gold bull market that I see coming here in this, hopefully the second half of this year?
A lot of option value in Revival Gold beyond what you see in the resource and in the measured and indicated. We do have a lot of sulfide material, which is the big mill concept that we think about, and so the metallurgy is important to that aspect of the project, and so we'll be carrying forward a second phase of metallurgical test work, again under the direction of RPA, and all dovetailed with our resource estimate update work. The focus will be specifically on improving flotation rates, and we want to come back and continue to look at recovery opportunities out of the flotation concentrate, so we can improve on that. It's not very exciting work, I gotta say. The more exciting stuff is from the drill bit, but it's all necessary and important to the resource update work we'll be doing as we close out this year. And as you say, we've got it all budgeted in the program, and so this team is moving on multiple fronts.
I always speak to the quality of management that Revival has and brings to the market. You have a very keen understanding of the capital pool markets, Hugh. You should be commended for that. And something that flies under the radar are some of the smaller fine print agreements that you work so hard behind the scenes that nobody really takes notice of. I want to mention one because the news release talked about how you renegotiated, I should say, the agreement, which will allow Revival to have a little bit more flexibility, just kind of depending on the markets. That included the NSR, it capped it, and again, like I mentioned, it gave you some flexibility. Can you give us some details on that and the thinking there?
Sure, and I have to say this is a collaboration with Yamana. They certainly understand the predicament that juniors are in today with the tight capital market. And so what we've worked out with them is a win-win scenario where we reduce the amount of committed capital into the project and the amount of expenditure that Revival Gold has to make outside of exploration, so that we can get as much value out of the exploration dollars we do raise as possible. For their benefit, Yamana will get an additional 0.25% NSR down the road, and we think that's fair value to give up for giving us more flexibility in a tough capital market.
Excellent. So to recap, we expect drilling at Bear Track first in late May, and then of course subject to permitting, which I understand is coming along great. We're hoping to get into Arnett Creek sometime in June. Would that be accurate, Hugh?
It is. We'll be drilling here shortly, and we'll certainly keep you posted.
I am looking forward to catching up with you in June. I understand you'll be at the 121 Mining Investment Conference in New York. Is that correct?
Yeah, we've got a full slate of marketing. We'll be in London later this month for the 121 in London, and then with the Northern Miner in London, and then to New York for the 121, and we'll certainly catch up with you in person there, Gerardo, and we'll just continue on telling the story because it's a great story to tell, and as you pointed out earlier in the show, we've got compelling value here. There's a double in our stock price just based on where our peers are trading.
Well, and if I know you, your team, and the people behind the scenes, the long-term committed shareholders, and I'm going to date myself a bit here, but I got to believe that you're using that Rolodex in this challenging market to evaluate any accretive opportunities out there.
We keep our eyes open, and we've got a lot of activity going on that front. I don't think at current share prices we want to be doing anything with our stock, but we do keep an eye on what's going on out there, and Gerardo we'll keep you posted on that front as we can as well.
Excellent. You have the infrastructure, you have a 2 million ounce head start, you're drilling, you're fully funded, and you have one of the best teams in the space. So should be an exciting summer and second half of the year for Revival shareholders. Thank you, Hugh.
Thank you, Gerardo.